Hey everybody, it's Pete Carmasino with Chaikin Analytics for this week's halftime show here on StockCharts TV. And what do we have here? Another great week in the market. We finished up on the previous week and starting off pretty strong here today. Earnings season has been great. There's a lot of activity going on from not only earnings and innovation ideas in the markets and new beginnings, in other words, reopenings. We talked about this last week where people are still buying. The pipeline is still full, but there's a shift in consumer demand to travel and let's go somewhere and let's do something. So I've been traveling for the last couple of weeks. I've been in Vegas, Miami, Palm Beach, just seeing incredible trends, just incredible. I mean, hotels are packed, restaurant reservations are not to be had unless you've done it a month ago. You're waiting an hour for a table in some cases. So things are changing and they're changing rapidly. And, that's just the nature of the market. Now, have you missed it? Not really. I mean, there's been some names we called out like Marriott and Hilton the last couple of weeks have been doing well. They're kind of hitting new highs. They're certainly up and to the right. It's hard to chase these names. I totally get it. But, there are some names that we're starting to break out too. So a few things we're going to talk about today. I'll go over the market overview before we start, but I want you to understand, we're going to be talking about one ETF, the WisdomTree Cloud Computing Fund, symbol WCLD, which basically is a fund that sort of tracks, the price, the yield, the performance of an index. Typically, normally what these ETFs are doing. But this is the BVP Nasdaq Emerging Cloud Index, and it's an equally weighted fund. So I'm just going to look at some of the top names. Now, even though it's equally weighted, some names kind of migrate to the top. So they're the top 7 allocations. They're not that much bigger than the other allocations in there since it tries to stay equally weighted. But we're going to just look at some of the names that are sort of top in the fund and that have been migrating to the high side and take a look at the patterns on the charts. And the other thing we're going to look at is some names, some ETFs that have actually just changed trend in the last week or so. So we're going to dive right into the charts in a minute, but just a quick market overview. I mean, what can I say? We're up across the board. Small caps continue to rally. They look great. We got the value group slightly outperforming growth today. Energy is leading with oil slightly higher after last week's big decline. We saw that kind of hit that $85 mark and kind of roll over. But, things are where they are. I mean, the trends are strong. The momentum is there. I feel like any kind of pullback that we're getting in the markets, whether it be brief or in the morning or for an hour, it's being met by buying. Now, our targets were 4,700 to 4,800. We're clearly in the 4,700 range right now. And just looking at that to continue. I mean, that's kind of where it's at. So other than that, we did have, the bipartisan bill is set to be signed soon out of DC. That's that infrastructure bill that passed the House on Friday. So that's kind of positive. But as usual, there's all kind of things that are being stuffed in the bill that kind of make you go, what's that for? That's not really infrastructure. And so there's a lot of that complexity still going on there. We can't expect anything less than that. So it's just the way it works. So, but hopefully that will add a little bit more of a tailwind. But again, we've got rates that are accommodated for a long time. We've been talking about that as well. We're seeing a taper that's going to begin. It's not going to be that much, but still, it is a step in the right direction. The economy's strong, consumer strong. We're looking good here into the year end. So let's dive in and take a look at some of these charts and see what we can do with them. All right, we're just looking here at the WisdomTree Cloud Computing Fund. Now, I got this information from wisdomtree.com, and you can find that there's fact sheets available online, but I just wanted to show you an overview from them. Again, it seeks to track, again, the price, the yield, and yield performance of that index. And it's an interesting, way to look at some different names. Now, this next slide is just showing you the breakdown of what's happening here in some of the names that are highly weighted, I should say. And it's Asana, it's CloudFlare, Bill.com, Datadog, Zuora, which is an interesting software company as well, Zscaler, and Tenable. Now, a lot of these we've been calling out for our members for weeks now. But again, in general, the way that this particular fund is playing out is looking stronger and stronger. So let's go in, and this is a way to show you how to use the Chaikin plugin on the ACP platform, and then kind of use it to look at the names that are highly weighted or maybe the best performers in the ETFs. There's all kinds of ways you can slice this, but I'm just doing it by weight today, and we're going to see where those ratings end up. Okay, everybody, we're back here at the chart. We're looking at the WisdomTree Cloud Computing Fund, WCLD is the symbol, and kind of just looking at the patterns here. Now, again, from a perspective of the last shorter term look, about a year back here, it's been pretty choppy. I mean, it hasn't been a clear cut move, but if you scroll back using the ACP platform, which is really slick. Again, I say this every week, but I just love the ability to kind of scroll and kind of scrunch the chart a little bit and look back from even or on the original COVID sell-off here. That low hit $20 and it has tripled since then. But you had some opportunity here where it kind of pulled back and then it pulled back again. And your MACD and some of the crossovers and all of that would have been alerting you. But we'll go look at what Chaikin was looking at on the ETF side as well. So when I look at WCLD here on our chart, we were bullish and then bearish, obviously here based on the trend. But when it started to get that relative strength change here and stayed, we were right around that June timeframe with a little pullback here. It's hard to not have those based on the market that we had over the summer. If you remember, it was a pretty sideways and almost frustrating market. But nicely, what happened here is on that breakout, it actually tested that once again. Like I said, it's not been an easy fund to own, but there's definitely something to the trend here. And what's more important to me is kind of looking at the underlying stock. So we're going to start with Asana. And Asana happens to have a 2.66% weighting. Now, like I said, this is an equal weighted fund, but sometimes names that perform like Asana, something that's gone from up over $100, more than tripled, in the last few months, that's going to gain more weight in the fund faster. And when they recalibrate it, it could get equally and cut. The weighting could get cut. But let's just look at the chart pattern. It's been great. I mean, there's no doubt we've got a bullish rating now. Financials are weak, but look at technicals and experts. And again, I like to pop between these two charting platforms to kind of show you, where this stands. Now, our relative strength really started here. Now, this is a new stock, but it was building a technical picture, which we like to call out all the time. And that breakout around that $35, $36 level really started at the end of May, beginning of June, and really never looked back. I mean, they had a couple of good earnings reports in a row, about 3 right in a row, but look at the relative strength. Again, the power gauge is showing weak financials. So let's take a look at that. You're going to see that with top line growth companies a lot. And the valuation, price to book and price to sales, is obviously weighting this down a little bit. But an incredible market cap. It's grown, rather quickly, but an interesting name, again, up over 2.5%, or 2.4% today, up about $3 as we speak. But it did get oversold. It is bullish, as you can see, and it's really in the middle of the band. So it's not something you want to ignore, but you can, kind of follow along. Now, the next one in weighting and not alphabetically set up is CloudFlare. That's symbol NET here. That's 2.56. So it's very close to Asana. Why? Well, look at the performance it's had. Again, a name right around the end of June here. You can see, where this price started to really move. Oh gosh, it was right around this crossover, around that $81 move. And look what it has. It's done another 120 point, 125 point move. And so that's why it's gained so much weighting in an equal weight fund. But the MACD breakout here is an interesting one, especially since that 50 never, the 20 never crossed under the 50 here. Those are great technical setups. But when you're doing this kind of trade, it's hard to find out, all right, is the stock good? Is the company good? Now, we do not have a great rating on this. We have actually something called a neutral negative, which means the stock is performing, but it's above the long-term trend that we use on Chaikin. So let's pop over to Chaikin, take a look real quick. And I'm spending some extra time on this one because this is really the worst rated one that I see here. Obviously, you can see that here we've got very bullish all the way down to neutral negative. And again, neutral negative means this is literally a bearish stock. It turned bearish here when it broke the trend, but when it moved above, meaning that the market, think about this, the market is overriding our rating and every rating really, just, it doesn't really pay attention to ratings, but it can ignore fundamentals quite frequently, and it does it a lot. So again, CloudFlare, obviously even rallying big today, almost 5%, 4.6% up $10 and change or $9 and change. Even though it came off an oversold setup here, it kind of rallied and really never looked back. So this is really up and to the right, hard to own. But if you look at this would maybe shy you away from it. But you have to understand what this means. When you see something that's neutral negative, so if you were watching it and you saw it go bearish and then go to neutral negative, that's actually an upgrade by us saying that technically the stock is ignoring the bad or weak fundamentals. And, again, the market is the one that wins. That the market has the most voting power. So I wanted to spend a little extra time on that. Let's go to bill.com, BILL. That's the third rating at 2.4, almost 2.5%. And again, right around that same time frame, we're seeing these breakouts in that end of May, early June move, again, from $151, more than a double, to $338. So there's no doubt the weak financials and earnings are being ignored because there are future prospects that look a lot better. And again, you didn't really see much of a breakdown in that MACD. It never really got below the zero line, but it meandered around it a little bit. If we go to Bill here, we'll take a look real quick. Same kind of setup. Now, again, our relative strength would have alerted our users here at 165, and that's a really nice move to 340. The only thing is, obviously, we were bullish slightly here, and this is interesting how the rating works. So sometimes you'll see a bullish upgrade. That meant that some of the calibrations were being weighted and pushing it into a favorable stance. But again, financials, earnings are just a little on the weak side. Again, don't forget, this represents the past, and the market is assuming better things in the future. Again, an oversold setup here before the morning started, up almost over 1% again today. Datadog is the next one. That's in the weighting range of 2.18%. Again, a very, very similar trend here, but a neutral name. So weak fundamentals can be ignored, but look at the experts and the technicals on this one. This might have been an easier read if you were using just the power gauge and some of the technical indicators here on ACP. If I go to Datadog here, again, what am I seeing? Up 3.4, 3.5%. Another big move. A couple of names here that are just kind of really breaking out. But again, right around that same time frame, June 25th, $99 and change, up close to another $100 move on a different stock. So pretty interesting patterns we're seeing here. And quickly, the other two, one I definitely want to look at is Zuora. It's an interesting, really cool company. They help multiple types of companies in many industries kind of move to a subscription-based model, which has been popular. Now, this one's bullish. So it's got maybe some more upside here, but again, you got to be careful. It's obviously overbought. You can see the RSI is pretty well pinned to the upside. And we did have a breakout right back here in October. So not so much in that June timeframe, although it did range trade, but then really kind of broke out really above that $18 range, was a nice entry level position. And if I go to Zuora, I can actually take a look and see that this is really actually it was oversold and rallying on the move here. Again, 2.5%, only up 53 cents. It's something that you could consider. All right, I'm running out of time here. So the other one is Zscaler. And again, you can take a look and plug these in and see where they kind of set up. And the other one is Tenable right here. But that's all I have for today on the charts. And we'll be back next week with another episode of Halftime here on StockCharts TV. Again, Pete Carmasino, Chief Market Strategist at Chaikin Analytics. Have a great week, and we'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.